things go wrong. To stay focused when others panic. To stick to your rules when temptation screams otherwise. That's mental strength. That's trading mastery. You're not weak because you feel fear. You're not broken because you make mistakes. You're human. But you can train your mind. You can build discipline. You can develop patience. And with time, those traits will turn into profits. But first, they must become part of who you are. Because in trading, mindset isn't something you use, it's something you live. So let today be the day you stop looking outside for answers. The indicators, the signals, the latest strategies, they're tools, not solutions. The real solution is within you. Your habits. Your thoughts. Your discipline. Your decisions. That's the real edge. You don't need more information. You need more self-control. You don't need more trades. You need more patience. You don't need a miracle. You need a mindset, and once you lock that in, once you commit to the long game, to the process, to the craft, there is nothing you cannot achieve. You are capable of greatness. But it starts with your mind. Your thoughts. Your beliefs. Your choices. Decide today to think like a professional. To act like one. To trade like one. Not someday. But now. Because the future you want is built on the mindset you choose today. Every decision matters. Every trade you place is a reflection of your mindset, your discipline, and your strategy. But among all the technical setups, market analysis, and emotional battles, there is one decision that quietly shapes the fate of your account more than almost anything else: your choice of lot size. It might seem like just a number. Just a setting. Just a detail. But it's not. Your lot size is your risk. And your risk is your survival. Get it right, and you live to fight another day. Get it wrong, and one wrong move could wipe you out completely. Many traders, especially in the beginning, fall into the trap of thinking bigger is better. They open a 500 account and start trading standard lots. They believe if they go big, they'll grow fast. But what they don't realize is that the bigger the lot size, the bigger the exposure. And the bigger the exposure, the smaller the mistake needs to be to blow everything up. It's not ambition. It's recklessness disguised as confidence. Lot size is not about greed. It's about calculation. It's about control. It's about knowing the value of your capital and respecting it. Every successful trader understands that choosing the right lot size is not just about making money, it's about protecting your ability to stay in the game. It's about building a future, not gambling for a quick hit. Think of your account as your business. You wouldn't take your entire life savings and bet it all on one risky move in the real world. So why would you do it in trading? Your lot size is your risk per trade. It defines how much you stand to lose, and that must always be in your control. Not the market's. Not your emotions. Yours. It's easy to get excited. You watch YouTube videos of traders making thousands of dollars in a day, and you want to be there too. You want results now. So you increase your lot size. You tell yourself it's just this once. But that once becomes a habit. And then a bad trade comes, as it always does, and you're unprepared. You panic. You double down. You try to recover. And suddenly, your account is gone. But it didn't have to be that way. If you had respected the lot size. If you had taken the time to calculate properly. If you had accepted small, manageable risk, the loss wouldn't have hurt. You would have moved on. Because that's what proper lot sizing does, it makes losses survivable. And in forex, survival is everything. You can lose money and still win in the long term, but only if your losses are small and controlled. That's what lot sizing helps you do. It helps you manage the pain. It helps you take 10 trades and come out alive, no matter how many losses you had. Because trading isn't about avoiding losses, it's about managing them. If you've ever blown an account, you know that horrible feeling, the shock, the regret, the anger. And if you look back, you'll often realize it wasn't your strategy that failed. It wasn't your technical analysis, it was your lot size. You went too big. You took on more risk than your emotions could handle. And when things didn't go your way, you didn't just lose money, you lost control. So let's break it down. In forex, lot size refers to the volume or quantity you're trading. A standard lot is 100,000 units. A mini lot is 10,000. A micro lot is 1,000. The larger the lot, the bigger the pip value and the bigger the potential gains and losses. One standard lot on your USD is worth about 10 per pip. That means a 50 pip loss is 500. On a 1,000 account, that's 50% gone in one trade. Can your strategy guarantee you'll never lose 50 pips? Of course not. No strategy can. That's why proper lot sizing is not optional. It's essential. You need to decide before every trade how much you're willing to lose. Not how much you want to make, how much you can afford to lose without losing your mind. That number should usually be between 1% and 2% of your account. If you're trading with 1,000, that's 10 to 20 per trade. Yes, it feels small.